time.
Is it a new stream or is it the same stream?
Is this thing on? I don't know. That was bizarre. That's like the second time that's happened.
I never went live on my Twitter. Now we're live.
We're live now.
Oh, we are back, baby.
Okay, that was bizarre.
So was yesterday the anomaly for stocks, or was it Friday?
What are you talking about?
Well, stocks sold off on Friday. Stocks rallied yesterday. Who's got it right?
Buy some VIX calls.
Buy VIX calls?
I don't know. Do something.
You're gonna buy VIX calls?
I bought them Thursday.
I didn't know that you. I didn't know that you bought VIX calls. Is that something that you do?
It's not important. I'm super long. That's what matters. And the market's on rollover alert. The earnings, will they be enough, right, to save the market from selling? Is the question. JP Morgan, good. Wells, good. J&J, very good.
That was this morning. That was today.
Yeah.
All right, let's do it. Let's get into it because I don't know any of these things. All right, hit it.
Yeah, things are happening out there in the market. Let's do it. All right, this is the morning show. Whoa, the charts are on the screen. Let's take them off. Welcome, everybody. Spencer, Steve, JC, Rick running the charts for us today. Bank earnings are the headline. We'll talk about that, and we'll talk about whatever else is on the guys' mind. We'll have Kenny Glick stop by. We'll have Dr. Phil Perlman in the house, and then we'll end the show hopefully around the open so Steve can get ready for the open bar because it's Tuesdays. It's fun thing to do on Tuesdays. Anyway, things are happening. How are we doing out there? We're doing good?
This morning, I sneezed so hard, I literally threw my back out. Has that ever happened, you guys?
Wow.
No, but that happened to Sammy Sosa once. He went on the injured list for that. And so you and him are
Sammy Sosa lately?
I had a feeling
you and him are the same, Steve.
It's happening more and more as I get older.
Maybe it was the steroids you were taking back in the day, you know?
No steroids for me.
I didn't take steroids either, but I was in that era where everybody else was taking steroids.
All my friends were on steroids. They're all shooting each other in the butt. Dude, it was weird.
All my friends, even some of the guys that weren't baseball players, they were just trying to get jacked. But the baseball players for sure, obviously.
No, I liked fun drugs. I'm kidding.
Jesus Christ.
I kid. I never got into the drugs, you know? I always thought I was too old. You know, 'cause I didn't do drugs in high school, so by the time I got to college, I'm like, I'm not going to start now. And then I got to Wall Street, and everyone's doing drugs, and I'm like, well, I'm not too old to start doing drugs now. And then I don't know, I just never got to that stage. You know,
you were definitely around them, though.
Oh yeah. Oh, that, yeah. Maybe a little too much, but
saucy cracked rib.
Before we get into the market, here's a good way to think about it. This one hit home a little bit. Speaking of partying in the 90s,
what
slide 2?
They're partying like it's 1999 again.
So Druck, I mean, you guys tell me. I mean, you talk about PTJ, you talk about Warren Buffett. Druckenmiller's in that conversation. You can make arguments that he's better than both of them. You got Tepper up there. I mean, this is the Mount Rushmore of fund managers. Are we in agreement there?
He's awesome. Yes.
So he's comparing stocks to, male mating habits here, essentially, and says, and this is Stan Druckenmiller, in terms of stocks, if there are, let's say, 6,000 girls out there, if 20 or 30 of them look great, then I don't need to bother with the rest, right? And you can always find, in terms of equities, 20 to 30 great stocks where the charts look good. God, that hit home. It hit home. That resonates with me.
But here's the problem. Today, it's not this. This is not the story. It's the opposite of this. 600 of them look good.
That's not the point. Just 20 or 30? That's not the point. Listen, I was very blessed to go to school in Fairfield, Connecticut. You had Fairfield University, had good talent, Sacred Heart, I mean, just a lot of, co-eds, if you will, whatever referred to. Then you had New Haven, not so much the Yale girls, but the University of New Haven,
Great
right?
Pizza. Yeah. Shout out, Jesuits.
So anyway, the point is, not everyone's blessed like that. You'll need so many. And then the stock market is the same thing. We know what this reminds me of? Small caps. Because even in bad markets, you're still going to find 20, 30 small caps that actually look pretty good, right? Just like in good markets, you're going to have small caps that don't look good at all. So I think this is even more important in the small cap space, this philosophy,
Yeah. No, it's good. It's good. I like it.
Because I was thinking this applies to the mega cap tech. This applies to the Mag 7. If there's 7 good ones, great.
Yeah, fine. Yeah. No, yeah. You're not wrong. I mean, listen, you can think about it a lot of different ways. But we know that it's not just those 7, right? That's how I think about it. All right, so I just wanted to share that. That one hit home. I like how he put that, Stan. Shout out, Stan.
Yeah, that's good.
Stan reads All-Star Charts research, by the way. We know that for a fact. That's pretty cool.
Hey now.
Has for many years.
I don't know how I feel about it. I think you could like a lot of the girls in bull markets.
Yes.
I think you could like most of the girls.
That's right. Markets. That was Fairfield University. I was from Miami. We didn't have blondes down there. And then I get to Fairfield University. I was like, okay, all right, I can do this.
A lot of that.
It was a bull market essentially for JC at 18 years old.
Wonderful.
Happy for everybody.
All right, let's do it.
All right.
All right, we got the Dow down almost 400 points. Whoop. Dow down almost 400 points. That's almost a full % to the downside for the Dow, 45,900. S&P 500 futures down 1%, 66.25, down 70 points for the S&P. NASDAQ 100 down 1.3%. That's 300 points to the NASDAQ, 24,600. 30-year bond futures are up as rates are falling this morning, 118.5 for the 30-year bond futures. Crude oil down 2.3% to 58, guys, 58 for crude oil. Copper down almost 4% on the day, back under 495 for copper. Gold flat, 41.30, all-time highs for gold. Silver back under 50, 49.70, down 1.5% with the VIX up again. VIX at 22 right now. And then over in funny money land, we got Bitcoin, 111,000 down 4,200 points. That's 3.6% to the downside. That's 111,000 even for Bitcoin. Ethereum back under 4,000, 39.45, down 7% on the day for Ethereum. This is from last night at 8 o'clock. And then Solana down 7.5% as well, back under 200, 193 for the Sol. That brings the total crypto market cap, Mr. Spencer Israel, 3.71 trillion. How do we feel about this morning's futures? Things are moving.
Yeah, fine. Like you said yesterday, let him dance. So, yeah.
Tell me about the earnings. What happened?
I feel like we see the same thing every single quarter with the banks, right? They're all mostly good, right? I mean, they're all good. I mean, if you just look at the stocks this morning, right? They're all. I mean, none of them are moving a ton. Last I checked, right? I mean, you got J.P. Morgan's kind of flat. Anyway, they all beat, right, on the top and the bottom line. Let's see. J.P. Morgan had the biggest beat of the bunch. Their earnings per share beat by about 20 cents. Revenue by $2 billion. But Goldman beat on the top and the bottom line. Wells Fargo beat on the top and the bottom line. Citi beat on the top and the bottom line. I didn't see a ton of guidance. I only saw guidance from JP Morgan gave some net interest income guidance for the year, which was up slightly from the prior reading. Wells Fargo also said the same thing.
Wells Fargo actually a slight miss on net interest margin, which is interesting. Just a tiny
for the past quarter.
Yeah, just their lending business.
Yeah,
eat on everything else.
Right. Didn't see any guidance for Citi or Goldman. A lot of times they give they won't give numerical guidance, but they'll give like qualitative guidance where they'll just like kind of say things on the call that are guidance, but they're not in quantitative form.
Hey, get this. You'll never believe this, Spencer. JP Morgan warns of increased risks due to complex geopolitical issues, tariffs, trade uncertainty, high asset prices. Wow. and persistent inflation risk.
Yeah. Are you saying that there's macro uncertainty out there? Is that what you're saying? That's what they're saying. What else did I see?
Headlines coming today.
I think that was kind of it. I didn't get a chance to see if there's any comments on the conference call.
Shout out to Citigroup.
I think they're going now.
Shout out to Citigroup for a different reason. We talk about this on here when they come out with absolutely ridiculous upgrades, right? And change their price target. Citigroup actually gave us a good one this morning. Raised the price target on First Solar, which I'm on board with. I like that. 300 from 198. That's some real talk from Citigroup. Nice.
That's a big increase. But anyway, in terms of the price action
out here, they're slashing the price targets on these private equity companies, the sell side. So maybe that's like a sign of some sort of short-term capitulation to the downside.
Can I turn the conversation to something Strazza has been talking about for a long time? Dawson nailed it right there. Homies and homie. Oh, he's talking about us as the homies. Sorry, I thought Dawson literally nailed it. I wanted to talk about home construction stocks, but Dawson's talking about us as the homies. All right, what's up, Dawson? How you doing,
homies are important here. The homies gave you
go up slide 3. Slide 3.
And they're tripping all over themselves for these Bitcoin miners too while we wait on the slide. I ran at Canner from 49 to 100 today. I mean, this stock goes up every day. You know, the Bitcoin miners went from being some of the worst stocks in the speculative growth arena to literally, along with quantum, and there's a much larger group for Bitcoin miners than quantum, but along those two groups are the best stocks in the market right now. Bitcoin miners out of nowhere.
Home construction, very, very important. Big component of consumer discretionary. Strazza's been pounding the table for a long time that these things are more like industrial stocks, and that has really proven to be true. You classify them how you want, but how do they behave, right? How do they behave? And I think this is a great leading indicator for a lot of reasons, whether you're looking at it as a leading indicator for consumer discretionary or industrials, both of them very important sectors. So, if there was ever a time where they were going to come in and buy the home construction stocks, this would be a perfectly logical place for that to occur. That was support back in 24 twice. That was resistance earlier this year before breaking out. It's also the anchored VWAP from the April lows. How am I doing here, Strazza?
I love it, but we got to see it, right? I mean, there has been no bid for these stocks for weeks now. Really, it's been since early September since they peaked and rolled over. So, yeah, absolutely. They got to dig in. You're right. There couldn't be a more logical level. But I see them down already this morning.
Is the 100 level significant here at all? Or is it just mine?
Yeah, it's definitely significant.
You think so?
Yeah, because we were talking about that level not long ago when we were trading these things. It was a big level then. It's a big level now. You get a big, fat neckline situation in this and XHB. Believe it or not, I think. Let me check. Around 100. Yeah. Look at XHB too. You got this big neckline situation on both of them.
So this one's to me, is this the most important chart in the world? I don't know if it's the most important, but I think it's in the conversation. I'll tell you that.
Yeah, they're killing stuff like Builders First Source.
Here, I got some tailwinds for you. Here's some for the bulls. Throw up slide 4 there. This one coming from zero.
Even look at Zillow. And you could do that if you're interested in the home builders. I love these housing stocks. It's a whole complex. Look at Rocket Mortgage. Look at Zillow. Look at Builders First Source.
They got to dig in right now. It's now or never. So listen. Consumer sentiment numbers coming out. I mean, just look at that disparity between Republican voters and Democrat voters. Just continues to widen, widest on record. I'm not sure how far back the data goes, but the widest on record over the last 6-7 years here on this chart. But nevertheless, Democrats down near the lows in terms of their sentiment, while Republicans are literally making new multi-year highs as we speak in terms of optimism. So just, a study of human nature, guys. Biases are real. You call these heuristics, and people think through different lenses, and is really, really important. I want to remind everybody, if you throw up slide 5, remind everybody how angry these particular Democrats were in early June when 90% of Democrats This comes from the Wall Street Journal. This was in early June. 90% of Democrats thought that stocks would fall over the next 6 months. Not only did they not fall, the Dow, S&P, and NASDAQ are all up double digits, with the Russell 2000 up 17% since then. And stocks around the world putting up, it was actually the third best summer in the last 40 years. So just to show you, the idea here is to find the pain points in the market. You know, they say in poker, if you don't know who the sucker is, then the sucker is you. You know, at all times, I'm going out of my way, a lot of us are, to find who the sucker is. You know, ARK has had historic short interest. Those stocks have been doing very, very well. The suckers were those short sellers, right? You know, you saw the dollar unwind coming into the year. The suckers were the dollar longs. The suckers were the euro shorts, right? So you got to look around and see who the suckers are. Democrats, just one of the suckers, if you will. I had another interesting one. If you can refresh the
Wait, hold on. Wait, what's this bottom pane?
That's just the spread.
JC, how much do you think the weakness since last week has to do with just like the dollar?
You know, really interesting.
Speaking of positioning, right?
Dollar was down on Friday with stocks. Dollar was up yesterday with stocks.
Interesting, right?
That's what's most interesting to me. That's something we haven't seen in a long time. Let's see how long that can stay. I got a couple of more here. Throw up the just economic policies. This is across the board. This is party agnostic, if you will. So this is everybody, just in terms of economic policies, favorable or less favorable. Just people just think that this is on a net basis some of the most pessimistic sentiment towards economic policy that we've ever seen. And if you look back to the early 90s, 92, 93, after the S&L crisis, great time to be buying stocks. They were super pessimistic. Great financial crisis, of course, great time to be buying stocks. 2011, of course, great time to be buying stocks. Go back even further, back in the early 80s, great time to be buying stocks. So anyway, we're down here at these levels. Again, historically, great time to be buying stocks. Actually worse than it was at the 22 lows, which I think is really interesting. So talk about, tailwinds and, suckers potentially. And the last one, I don't think it's that market related. I just thought it was interesting. If you can refresh it, slide 7, it's the new slide 7. This one comes from Joe Weisenthal. This is specifically 18 to 34-year-olds and their sentiment. And this is their sentiment relative to the rest of consumers. So this is 18 to 34-year-olds relative to the rest of consumers. This is they're historically very optimistic relative to boomers and things like that. Historically pessimistic, which, I don't know what that means for the market, but I thought that was like, odd, interesting, right?
What is?
I think this means nothing for the market, probably.
Right, that's what I'm thinking.
But it is
18 to 34-year-olds.
Yep. On a relative basis, relative to all that green is because usually the young kids are more optimistic than their elders. Now it's the opposite.
Yeah, that's a thing.
Also, we know they're not having any sex and they're not drinking, they're not partying. Yeah. They're playing too many video games and they have other problems from according to the data, right? Yeah. So, right?
No, but it's a thing. It's like this melancholy generation. I don't know what to do. I don't know what to do.
I don't know, man. It's a bummer. I don't think it's a tailwind for equities. I just found it interesting, kind of looking through some of the data. And then
these people have no money anyway.
Right, so exactly.
It doesn't matter.
It's just what it is. Can you throw up that last one? I thought this was really interesting. Do you know what Simchat Torah is, Spencer?
No. I'll give you half credit on that one. That's not how it's pronounced.
Oh, okay. I don't claim to speak Yiddish or whatever. So I mean, I don't think
it's Hebrew. It's Hebrew. It's a language that people speak.
Okay, it's Hebrew. All right, I learned something new. Okay, so then what's the story?
Simchat Torah. You gotta get the in there.
You gotta really get the throat going.
Yeah. This is the annual holiday where they finish the Torah, so you got to rewind back to the beginning and start over again.
Is it like a New Year's thing or just a Torah thing?
It's just a Torah thing. It's hey, we made it to the end. Let's start reading it all over again for the 80 billionth time.
That's cool though. I like that. I don't hate on that.
It's kind of a party.
Like if you're not Jewish, you can apply that to technical analysis of stock trends of Edwards and McGee. Just read it throughout the whole year, and then when you're done, you could do what the Jewish community does with the Torah. You could do that for a technical analysis. Like that's a good, right? You don't like that?
I never heard it put like that.
I never really thought about it. I didn't know of this Jewish tradition. I'm not Jewish, so I don't know about this Jewish tradition, but I like it. I'm into it.
It's sort of like a, hey, we made it.
Oh, I love it.
Now let's do it. Now let's do it again.
Technicians who aren't Jewish, or even if you are Jewish, it doesn't even matter. That's a cool thing to do. You take the Bible of technical analysis, like the Torah, right? And you just take all year to read it, and then you start again and read it again.
And start again. That's it.
Or maybe like market wizards or something, you know?
Anyway, there's apparently peace in the Middle East now. So that, from what we know about global events and markets, that's probably bearish, right? It's a contrary.
Bill says we're not correct about the kids. Good. I hope I'm not. I hope all that I'm hearing is all fake news. I hope you're right, Bill. I'm rooting for you and your kids, bro.
I think we have some experience.
I'm rooting for the kids. I'm not,
I mean, I don't know.
I'm a big fan of the kids. I really like a lot of the stuff in the chat today. I like Robert's comments about some real economy stuff, flashing some bearish signals right now, first time in a long time. I like the comment I saw about the pain trade probably being just a choppy, shitty, volatile mess from here to year end, right? A very different environment, less conducive to taking risk, making easy money on the long side. I could really see that. It doesn't have to be nasty downside. It could just be chop.
I wouldn't be surprised to see some pretty impressive dispersion in Q4 in terms of sector returns. Maybe some industry group dispersion.
Yep. They should bring that word back for Q4. That would make sense.
That's the SAT word of the day, kids. For all the kids out there not having any sex and not partying, right? Listen to that. Dispersion. Tell them what it is, Strazza. Dispersion.
Correlations were uncomfortably high. Too much stuff was working. Dispersion means you got a bigger range, bigger bifurcation in the market between things working, things not working.
You know what we need? You know how every year the dictionary does like the word of the year? Yeah. We need like a market word of the year. I don't know what it would be.
Garden variety.
Oh,
I saw your tweet.
He's gone. No, it'll probably be like tariffs, trade war. I don't know, something like that.
Hey, listen, are you buying the bonds?
Me?
Yeah.
No, should I be?
We've been buying bonds. You don't read our stuff?
No, I read your stuff. I know you. I know what you guys do. Yeah. I couldn't believe it. Steve went from chief YOLO officer to buying Pepsi calls and buying TLT calls. I can't believe what has happened.
Yep. You changed my title. Changed my fucking title.
He's the chief bond officer. What are you now?
Bonds and low volatility stocks. No, you know what we're really doing? Being patient. And you know what we'll talk about on the open bar today? Mostly as an exercise and less as a market call, but how and where to get short if that's what you're looking to do. I don't think it would be imprudent, right, to dabble a little bit on the short side. If you're like me, have a leveraged long portfolio in an environment like this where you've made a ton of money, it's probably wise to protect yourself a little bit. So whether you want to do it as a hedge, call them protective puts, or you want to make a downside bet, it'll be a good exercise. We'll just run through the charts. We'll outline some big levels on the indexes that would warrant me drilling in a little more and looking for some short opportunities. And I'll tell you, this is the first time. I'm not some like rush to short person. This is the first time probably since March. You've heard me talk this way.
Throw up the new slide too. I'll give you a good short entry.
Give it to me.
I know we got Kenny in the house. We'll go to Kenny now, but I got a good short entry. For me, it's the Russell 2000.
Slide 2.
Oh, my bagels are here.
I think this is a pretty good signal, and I don't think it's unrelated to the vulnerability in home construction and sort of industrials and things like that. Transportation stocks are all industrials. They tend to move with these Russell 2000 futures. So we tried to get above those highs, failed. Closed yesterday back above the all-time highs from last fall, believe it or not. So, that to me was impressive. Let's see if they could stick the landing and follow through today. But either way, if you're looking to be short this market and you want to be net short the overall market for a tactical trade, I think if the Russell 2000 is below those prior highs, I think that's your indicator. That's it. You want to be net short? I think that's your indicator. And if Russell 2000 is above those prior highs, I think being net short is a mistake. But I think it's pretty binary here.
This is a sloppy, floppy mess. Can't trust it. You got to get this breakout in the books.
That's right. You got to get in the books. And if not, and you're looking for a short, net short position, I mean, this is your indicator.
What would you short, though? You wouldn't short this. You'd probably go short like banks or something.
Oh, I mean, you can short a lot of things, right? But this is your indicator, I think. And then if the Dow's below 45,000, that's another one. So the Dow right now is just under 46,000. So there's room there. But if the Dow's below 45,000, that's a big, big problem for this market.
I'll tell you another thing. It's harder to express it as a trader or an investor. You simply have less options. Our friends, guys like Todd Stone, will come on here and they'll talk to you about all of the new levered long funds that are being launched. Guess what's not being launched? The same amount of levered short funds. They're also not as liquid.
Can we get a chart? Can we get a chart of levered short fund launches?
Yeah, look, Todd's got it. We can request special request to Todd. Yeah, and he'll tell you the same story. You know, he and I talk about it. But even as I will look through, JC, like the options chains, it's just very little. And there's less on the put side than the call side a lot of times too. These days.
I want an all-time chart. Do we want it quarterly or a monthly? Monthly launches.
I was looking through home builders.
Probably quarterly.
I was looking through home builders, building material. I wanted to short the hell out of this builder's first source yesterday, the day before. I was with BLDR. Nothing. I can't even do it. I can't even do it.
All right, let's go. Let's go to Kenny. Let's see what's happening intraday.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Mr. Kenny Glick, hello, sir.
What's up?
Everything, baby. Everything. Big move yesterday in the market. Big move. Follow through into the afternoon, the whole thing. Giving some back this morning. How are we approaching this mess?
I'll tell you something. I'm back. I'm back, and I'm bearish, and I'm taking no prisoners. That's right. Wow. I'm changing my tune, people. It's a bubble. It's definitely a bubble, 100% a bubble, and it's definitely going to end very, very badly. Enough with these material stocks going up from 5 to 50. We're buying stocks because of the names of the companies. We're buying stocks that don't even exist, and they're going up 10x. Definition of a bubble. I don't want to hear it anymore. Short everything, get the hell out of the market, and run for cover. Seriously, I'm done. I'm done. I'm going back.
Yeah, Kenny, the perma bear is back.
I'm back. I'm back. Fuck all
what happened? What happened to shorting? Shorting is short-lived, and you're gonna die.
I'm gonna take my 7 minutes, and I'm gonna rock and roll with it. Because last night, once again, look, if you're not trading futures, I haven't slept again in like the last 48 hours. Look at this trade. Look at this trade. You want to short something? I'll show you when it's okay to short something. Right here. I'll give you a short right here in your face. Let's go. Watch this.
Give it to me. Show it.
Right here. You want to short something? It's called the 1 minute multi-day VWAP reversal. Right in your crotch. That's the finger of God right there. You're already, this whole market's about to do this. Take all your damn material stocks and your nuclear stocks and your fucking quantum. Fuck this market.
Yeah. Kenny's got the regretty. You're definitely taking profits in the USAR, right? You can't not.
Bro.
Yeah.
I'm sick of this market. No, I'm done. Okay. I sold everything yesterday. I'm getting rid of SRAD too. This dog. They upgraded it 3 times. The stock goes back 30% on upgrades. Enough.
All those are under pressure.
Enough. I'm not having it anymore.
Let me ask you this, Kenny, as an open-minded man of many talents, what would the market have to do to invalidate this thesis?
It'd have to break VWAP.
Got it. So the end of the world is happening, but if we're back above VWAP, then shorting is short-lived and you're going to die.
Cancel. That's right.
All right. Cancel. I have a real question. Real question. Trader's question. Kenny's the best person to answer it. Kenny, are you able to pull up the pre-market, like 1 minute chart here?
Yeah,
pre-market
sure. What we got?
Do the Qs. Fine.
Yeah. Oh, well, that's the NQ futures. Yeah.
All right. So if you were to drop a candle just like since the market closed yesterday, I'm sorry, a VWAP, since the close yesterday, are you able to do that here?
Yep. You're looking right at it. So right now, if you're shorting the Qs, you probably should be covering because that's a faux show and you got the VWAP break. So
that matters. That's the signal that
is the signal because every time I'm short, this happens and I'm forced to cover because shorting is short lived and I'm going to die. The trade's already over. I was talking about the futures, but this Q trade, if you're short the Qs, you have to be covering right now because you can't be a victim to a market that doesn't go down. As much as I'm just sick of watching these material stocks, I mean, no joke. Some of these stocks were $2 the other day. They're trading at $70. I'm freaking out a little bit. But anyway,
it's crazy.
This is the end of the trades. That's again, this is why when I say VWAP saved my life, it has, because as a shorter who now I'm getting a little riled up now. I'm looking at short stocks. Yeah, like Rigatoni this morning, right? Here you go. I'm dying to short this thing now, but I know it's going to 80. It's a bad idea, but there's a reason to short. You break VWAP and you can't stay above it and you rolled over. But every one of these shorts, you're a faux show bro away from getting your head caved in. So if you're not using VWAP and you're trying to be a shorter in this market, you will certainly lose. You will definitely lose because every time this pattern shows up and breaks VWAP, you're going higher. So you got to cover and you got to go long. And that's when you're doing something right.
And that's really hard. I'd love to hear Strazza's thoughts on this. That's really hard to do and tends to be oftentimes a great trade. More often than not, is that when you get stopped out of a position, not only do you get stopped out, but you flip it the other way. How often do you do that, Strazza? How hard is that?
I usually have an idea of what my bias is going into the day. So it's very rare that I'll literally like you mean flip it like from a long book to a short book in a day? Almost never. I literally can't really move that fast in my tactical account. I would have to throw on a massive protective hedge if I thought things were going to go get ugly on me, and then get out of my long slowly.
Dr. Steve
how I would do it.
talks about
it's harder for someone who's been bullish something for a while, and then again like SRAD. I didn't want to turn completely bearish because they were getting upgraded, but then the stock broke down, and I should have just sold it and shorted it. But again, it's much easier to cover and go long in this market right now. Selling something and going short is different, is just awful usually. But when you have a market that doesn't go down, listen, on the way up on USAR the last couple of days, we found pretty good opportunities to short it. But again, keeping in mind that the shorts don't usually last. Look, we got paid on USA short 3 or 4 times yesterday. And obviously, again, here's the faux show bro into the close because this market just does not stay down. So you could short stocks, but you better be ready to get the hell out of the way. And, we're not even talking about the banks. I mean, so far, you got Goldman Sachs gapping down. I'm not looking to short it. I'm just looking for a reason to buy it because gap down Goldman Sachs generally finds some strength. So again, I'm looking to see if they walk this thing down to 755 first. You got JP Morgan, right? Just chopping around. That's below.
You're looking to fade the banks this morning.
I will. A lot of them are gapped down. The one that's actually working the best is the Wells Fargo because here you go. Here you got the fake out, shake out. And again, the trade that I say never fails, there it is. So if you get the gap down that breaks back over the VWAP, that's already a short. When you see it on an earnings report, it works every time. And it's just unbelievable. So again, pretty quick reaction. I wasn't there for it. I was actually not paying attention. Gaps down, breaks back over the VWAP, rips, and then there's another one. So this is what's nice about this chart pattern. There it is again. Faux show bro VWAP break. So if you missed that first move, luckily enough, Wells Fargo gave you another chance at it right there and a wonderful trade right there. So again, definitely watching the banks because if the banks roll over, I think the market is going to stay down. UVXY is being up 90 cents. It's a little bit of a cautionary tale. And again, if UVXY is over $13.40, you better be short in something. Best to be short in something. You got to be short in something. All right. So watch UVXY. That is the cautionary tale. If it gets over Friday's highs, this market's going a little bit lower. Or in my case, I hope it goes a lot lower. Right in your face.
Ow. All right. Crazy.
I don't have any problem with any of that.
Yeah.
I'll see you guys later.
Adios, Kenny.
JC, you like the bonds?
You know, I'm a trend follower, Strazza, right? And so this trend in bonds has been such a hot mess.
Yeah.
For the last several years, and we're right in the middle of that hot mess. Could we get towards the upper bounds of said mess?
Yeah,
certainly. So I guess it depends on your time horizon, right? Is my answer. I mean, as usual, not to be a cop out, but like, if you're looking for a trade to trade to the top of that range, knock yourself out. But we're in that range right in the middle.
Volatility is at multi-year lows.
Yeah.
Now you're right about the trend. It's messy on pretty much every time frame, or it's really down over the longest, right? But volatility is compressed to multi-year lows, really in some cases like lowest level in almost 10 years, daily, weekly, and monthly, all at the same time. So I don't know like what direction so much a move is going to come in for bonds, but I think a big move is coming. I think some bond market volatility comes with it. That would make sense, right? And I wonder what that means for everything else. But that's the signal I'm getting. Multiple time frame alignment, volatility is coming for the bond market. Up or down, not sure. I don't think either is really good for risk assets. I would go out on a limb and guess that in either direction, it might not be great.
I'm still interested in this. Dollar was up a bunch yesterday in a strong tape, and the dollar got smoked on Friday in a down tape. That's the big one for me.
Yeah.
That's the big one. Can we get like how would we look at that? Would we look at like a rolling 2-day correlation? Does that make any sense, or is that stupid?
I don't know. We could try it. We could play with it. But
like I want to see like how often we've seen that positive correlation over, I don't want to say an extended period. It's only 2 days, but like,
it's probably pretty short. So JC, here's the problem with the dollar right now. Euro.
I like how you got a little notepad.
Yeah, I'm writing down stuff that I got to talk about. The euro, is that a top? Pound, is that a top? How about the Canadian dollar? That's a top for now, right? That's a top. How about the Japanese yen? That's a top too. So if all of those are
euro a top?
Is that a top? I don't know. Look at the other ones. Look at the CAD. Look at the CAD. Overlay the euro.
What time frame?
Make a list. What do you mean? What time frame? What are you looking at? Look at CAD. You can't see it. And then imagine the euro looking more like that. You could draw a line at like 71 on CAD. I don't care what you draw. You could draw it at 72. You could draw a really fat line. How fat are your lines?
Fat.
Miami guy.
I like my lines fat. Nice and thick lines.
So I guess the point is, if all of those are tops, that favors a really much higher dollar, steadily higher dollar over, I would say, the intermediate term.
Yeah.
So
I don't know.
I don't know. Wavy doesn't know either. But look, I zoom in on my charts because I'm trying to make money today, tomorrow, this week, next week.
Yeah, no doubt.
I zoom in. Wavy, you could zoom all the way out if you want.
There's just so much resistance. Like we're just in the middle of a range in bonds. We're in the middle of a range in the dollar. I think the big takeaway of the big range in the dollar and a big range in the bonds is that bonds and dollars are in a range and stocks like it. I think for me, that's the biggest takeaway of the whole thing.
Oh, Bridal Mac just ruined it. I was hoping we could go the whole show without somebody saying debase, but you blew it.
I have never heard this word in my entire life until Perlman brought it up last week, and then you just brought it up now. I
sent you an article this weekend. You do not read my texts. I group texted you and Pearls.
I only look at the text when you send me
big article.
Guys just sends me pictures of his steak deliveries, his Wagyu and his caviar deliveries.
A lovely steak delivery.
You consume a lot of steak and caviar. It's very healthy for you.
My favorite vehicle for caviar lately is an open-faced egg salad sandwich with some chives and red onion. Really nice.
Yeah?
Yep.
Mm-hmm. You know what's funny about me? I'll just get, I'll be all bougie at the beginning with the caviar, get a little creme fraiche, little thing. By the end of the thing, I'm licking that fucking can,
Yeah, I know. I'll open one and be like, I'm going to have just half of this while I watch the
bullshit.
Game.
Yeah. No, but seriously, like, what is this debasement thing? Like, where did this come from? Is this like an old word and I'm just like, I don't know, not paying attention? Where did this come from?
We're not going to keep explaining debasement to you. Okay.
No. I understand what it is. You guys explained it to me last week. I get it. Where did the word come from? Like, is this like a new thing or no?
No, it's as old as time. I was complaining about this just recently. It's as old as time. It's as old as forever. As long as I can remember. This is a fear. This is a perma bear end of world. People with like the soup cans and like frozen food and crap, whatever, however they do that in their bunkers in their basements. It's for those people. It's that kind of thing. End of the U.S. hegemony, right? The United States falls like Rome, right? It's those people. So I don't know. Great story though. Probably gets the clicks, right? They love to talk about it on the TV. Mm-hmm.
Are you buying the useless coin?
I bought some yesterday, like an idiot. Still out here buying stuff. I don't understand it. I can't explain it. I didn't mean to. It was an impulse.
I don't know what's the but like, why are you throw up the chart of useless coin there, slide 11?
I bought some Doge the other day too. I'm down like 30% on it.
Useless coin looks great, man. What's your beef with useless coin?
I told you I just bought some yesterday after you showed the chart.
And then you complained about it.
Yeah, because I'm not supposed to be buying things out here right now.
Why are you not supposed to be buying things?
I'm reducing.
Okay. Well, I don't understand what you're reducing has anything to do with useless coin showing a ton of relative strength. Is there any coin or any asset out there showing this kind of relative strength in this tape than useless coin?
It's so good. I bought the pancake swap too.
Did you? Okay.
But now Louis telling me some other shit. How do you feel about crypto? I'm like, let him dance. Let's see. It's not great. It's not encouraging. I understand the headwinds now with the new trade fight. But what do you think of the damage there? Is it okay? Is it fine? Do you buy more? Do you wait? What do you do?
I've been kind of looking into what happened over the weekend on Friday, and looks like there was an attack on Binance in terms of like the leveraged kind of like the mechanics of that particular exchange, and they exposed some vulnerabilities.
I don't like Binance.
Yeah, I mean, but the theory based on some of the work that I've done is that, whether it's true or not, but the data is there, is that they tried to expose that vulnerability in Bitcoin, and then they got in Bitcoin in Binance particularly, and using the stable coins on Binance and like the lower liquidity, like they found that vulnerability and they only had a small window of time. And I think they got lucky with Trump coming in talking about China tariffs, and I think that may have been more luck than anything else. There was also a big whale coming in, opening a new wallet and shorting a ton of Bitcoin right before that announcement as well. Like there were some shenanigans taking place there, which I thought was interesting. That Ukrainian hedge fund manager leveraged 50 to 1 on 60 million. So what is that? 3 billion. So, let's call it 2, just to be conservative, 2 billion, but realistically 2 to 3 billion blowing up. And obviously he took his own life in his Lamborghini. But there were a lot of shenanigans taking place over the weekend in crypto.
He McClendoned. So I have, if I were to be a conspiracy theorist here, so what the hell, why are we still putting up with Binance? I hear the worst things about this platform. They basically like fake volume, right? And like fake their markets, and there's zero transparency. The US government could stop this, by the way. Like we could put an end to that. Why are they letting Binance continue to do all this shady shit? It's been going on for a long time. Several cycles now. You hear about this stuff. So that's strange to me. Right? It doesn't help. Clearly they're not helping stabilize the system.
I don't know enough to have a strong opinion. I actually don't know enough.
They seem like the consistent bad actors in the space. Whenever you hear a story, they tend to be involved on the bad actor side.
And you don't think that is you being biased because of your man crush on Brian Armstrong?
The chat just I love Brian Armstrong. God, is he great. Coinbase, by the way, is the complete opposite of that. They're always on the good side of things.
Right. Can you throw up slide 2?
I understand Binance is foreign. I'm talking about the U.S. government.
So this one comes from our friends over at Carson, our friend Ryan Dietrich.
Yeah, I know those guys.
We're looking at we're looking at bull markets going back to 1950, and kind of just reiterating, just in a different way. We've shown these stats before. Grant does a great job with them, but just a different look that the current bull market is below average in both returns and in duration. So, based on historical averages, the bull market being over now, and that was it, that would be a lower probability outcome.
Mm-hmm.
Which
I know.
Just an interesting look. Just a reminder for everybody.
What do you do with it? No, I think it's great. It's good context. What do you do with it? If the market turns, do you say, oh, no, it wasn't long enough?
I think it just answers the question as to whether there's precedent.
Sure.
When people are like, oh my God, this has never happened before. And all this winning is unsustainable. And oh my God, like actually all this winning not only is perfectly sustainable, if it were to stop now, that would actually be unusual. You know what I mean? Like, I think that's just the context that this gives, right? Spencer, as a man of the people, Spencer, would you agree that this kind of helps settle your thoughts of whether this is a bubble or some kind of unprecedented, right?
Do we also think, though, that markets move faster today than they used to?
No.
You don't think that?
No.
I do.
All right. Well,
I kind of do. I kind of do too.
I would encourage you to go back and count again.
I mean, Dennis Dick was just at Portfolio Accelerator giving a whole talk about it. So a lot of people would argue that, yes, they definitely move a lot faster.
Like three years today is like the 1970s equivalent of like 6 years. I don't know.
You have a couple examples, right? Like you could argue JC's point and say, hey, look at 2022. That was a prolonged, long-ass bear market. Nothing happened fast there. That kind of took forever. And I could say, well, look at 2018. Look at COVID. Look at earlier this year. Those were abbreviated bear market cycles. Like rarely does it happen that fast throughout history, but it's happening time and time again.
You saw it all the time in history. You saw it all the time. Don't give me that shit. That's very wrong.
A lot of people disagree with you.
All right. Well, I mean, it happened in 37. It happened in 46. It happened.
Yeah, you have flash crashes all the time.
It happened in 62. It happened in 66. It
they
happened
also
in
had prolonged bear
87.
markets.
It happened in 1990. It happened in 98. I mean, you want me to keep fucking going? It happens all the time.
No. I don't, because
shit.
No, here's the bigger point. It doesn't fucking matter. Follow price, follow the trend. It doesn't matter if the last 10 bull cycles lasted X, Y, Z long and returned this much percent. You're trading this cycle. One thing matters at the end of the day, and that's the current market price of the shit you own. That's it, right? So that should be your roadmap to get in, to get out, to protect yourself, protect the profits that you've made. Not, last cycle or the last 5 cycles on average did this. That won't help you when shit hits the fan.
No,
I do think
I got to tell you, Strazza is absolutely right. We talk about history. We talk about different cycles. Here we're looking at a bunch of them, right? We're talking about all these V bottoms and, head and shoulders tops and all these things. At the end of the day, the only cycle that matters is this one, because what happens this cycle is the only thing that's going to pay us. And we know for a fact that this cycle is going to be different than all the other ones, because it's not just different this time, it's different every time.
And I will say, on top of that, though, that guys like Ryan Dietrich and studies like this, stats like this, these guys do a great service to the investing community, really like the retail market, because they train people to think the right way and to try to operate on a primary trend time frame, which is the right call for most people. We're out here trading call options that expire Friday, right? So we have to act a little bit differently. So are you a trader? Are you a primary trend investor? This kind of stuff, I think, trains people to think and act the right way, especially during volatile times. So I do like it. Not fucking shit.
Cool. Yeah, we've all been conditioned to fight the last war, but the last war is not the war we're in right now. Right? Everyone
tell everybody about getting with Miss Olivia Voss today. Olivia Voss crushing.
Speaking of trading what is in front of you in the current cycle and not getting stuck in the past. Voz, from what I understand, JC, is she's going to outline her plan for the next few months. And you've done this before with her. I think you went live a few months ago. And then the last time, if memory serves, the last time you and her did a live event together, she ended up with like a 50% winner like that. It was like that day or the next day. I don't remember exactly. But
that particular
anyway,
day. Yep.
Yeah. So I'm dropping the link in the chat right now on YouTube, 1 p.m. Eastern time. If you register, you will get the watch link sent before JC goes live. And like I said, last time they did this, which was 2 months ago, there was a huge winner that day. So
you guys want to listen to this, and this is really interesting. And Strazza, you'll like this. So she tends to do much better. I should say she makes more money on trades from the months of September, actually starting in October, through February. And when I saw that, I was like, why is that? Like, that doesn't make any sense. Are they just making it up? You know what it is? It's because you know how she trades the ranges? When it gets into a zone, she buys it and then sells it when it hits the top of the zone. Like that zone is predefined, right? The reason she makes more money from October through February is because of the added volatility in that period. The zones are wider.
Oh, yeah, bigger targets.
There's more money to make. There's more to capture in that particular time horizon, both in reality and in the back test as well. I thought that was so fascinating because at first I was like, yeah, really? Does she really make more money during that period? And then when I saw it and I saw the math and it was explained, I was like, wow, that actually makes perfect sense.
Volatility.
Seasonality thing.
Volatility is a hell of a drug.
And you want to know something? When I was talking to them and, we're going through the strategy and everything like that the other day, they're not seasonal like people. They're not looking at these seasonal charts like we are. Like they didn't put those two things together because that's not what they do. They're options traders. So for me, I'm like, wow, that makes perfect sense. And they're like, why does that make perfect sense? I was like, because October, volatile, and then you get all those holidays, and then you get the volatility in February. So the fact that that period ends after February, that makes sense. Like, they're like, really? I'm like, yes. They're like, very cool.
A lot of these options traders love them, but big math people, really, they trade to look some complex strategies. They're usually really good at math. They understand a lot of stuff most of us don't. It's cool.
Yeah. For Strazza, Strazza likes to keep options simple. I like to keep options simple. Vaz, as you'll see today in the video, she likes to keep things stupid simple. She only trades one thing.
The only Greeks I know make falafel.
Oh, here we go.
All right, 1 o'clock Eastern. The link is in the chat. And if you don't know how to get it or having problems, just email us questions at stockmarketmedia.com, and we'll make sure you have the link for that.
Happy Tuesday.
Elsewhere on the channel, and we're not done yet because we're going to fill in a second. But reminder, Steve's going live after we're done here at 9:45, about a half hour or so. If you ever want to kind of see what Steve does off the open and kind of watch his thought process,
could be a hot one today.
It's going to be a hot one. Steve's going to get short
in the middle
everything.
Of the show,
apparently,
I'm fine.
What?
If I disappear, if we have technological difficulties in the middle of the show and I disappear, I'm fine.
Okay.
Market maybe.
That's good.
We'll see.
That's good to know.
What if we plunge and we could just watch it live? I'll start screaming. Should I break a keyboard like Kenny?
Isn't there a plunge protection team?
No, I was gonna say, well, yeah, but isn't like Jerome Powell doing a thing this week? Did I make that up?
We got a Powell. We got a Powell this week. Oh,
if you had to bet, do you think we have a Powell thing? I'll take the over.
We have a Powell?
Yeah, tomorrow.
We got
oh no, today. Yeah, today. I was right. It's today.
Uh-oh.
Yeah.
Pump. Activate the Powell pump. Pow.
That's right.
Let's do it. I'm ready. All right. Say hi.
What's the trade for today, Strazza? What are you putting on?
I really
give me the industry.
I don't know. I bought some things I probably shouldn't have yesterday. Sold a ton of shit. I like bonds. I like bonds and patience and letting the dust settle here. I want to see what happens today, right? This can go one of two directions today. Here's what I'll say. You can almost look at yesterday's range and play off of that. If we plunge, you want to trust it and go with it over the short term, right? If we start taking out lows, you don't fight that. Don't fight that at all. Don't buy into it. Protect yourself, buy puts, whatever. Now, if we go in the opposite direction, I think you do the same thing. You got to trust that too. If we reverse this little weakness here this morning, you get like a big green, they buy it up all day. I think you go with that too. So I think we learn a lot here in the coming days. Something we've never said on the show before, but I'm excited for it. And we'll talk about it.
Put $1 in the tip jar.
Actually, no, that doesn't come up a lot.
Yeah, because we purposely don't say that, because as a trader, you would say that every single week. Oh, we're gonna learn a lot this week. Oh, but
yeah, we are gonna learn a lot this week.
We learn a lot every
today.
week. So
all right, bye guys.
My point is here. I think that a follow through to Strazza. I think a follow through is big. You have a potential major thrust developing based on yesterday's up volume, down volume, things that aren't seen, often throughout history. But for it to matter, it needs to have follow through. So in other words, any thrust characteristics from yesterday without follow through today are invalidated completely.
And I'm a big one-day guy. Yesterday was good, right? It's a step in the right direction. We stopped the bleeding, but I wasn't super impressed, right? That wasn't like a crazy green everything day. I didn't really, the leadership qualities on yesterday's tape, a bit strange, a little bit too speculative for my liking. So we'll see. We learn more in the coming days. But yeah, spot on, JC.
Speaking of breath and that kind of thing, that kind of data, I want to give a shout out to our own Grant Hawkridge, who's been doing his daily number for 1 year. Actually, the 1 year anniversary of it was, I think, on Friday, maybe Saturday. If you don't get the daily number, you really, really should. It is free. It is daily, as the name would imply. The link is on the screen. It is one number, just one number every day. It can't possibly take you more than 30 seconds to read this email. Okay. It goes out at like 5 o'clock in the morning because Grant is, in Australia or wherever. So it's super. It's like the first thing I read every day because it's in my inbox right away. And he does a great job. So I highly recommend if you do not get the daily number, get it. The link is on the screen. You really should. We got Phil in the house. Let's bring Dr. Phil out, and then we'll get out of here, and we'll let Steve do his thing off the open. How about that?
Out. Mr. Pearl Dog.
What's up, fellas?
How you doing, sir?
Hey.
I'm great. Am I echoing?
No, you're good.
No.
Awesome.
You're good.
What's up? What's up, fellas?
Everything, man.
What's up, my homies?
Good. We were just talking about, I was thinking about this morning, thinking about poker. I find, I spend a lot of time, as you've known me for a long time. We can't see you, Phil. There you are. There he is. I like how Phil disappears from the screen. In poker, you want to figure out who the sucker is, right?
Yeah.
And if you don't know who the sucker is, then the sucker's you, right? I hadn't really thought about it that until yesterday, actually, where when we're looking for vulnerabilities in the market and the mispositioning, right, and sentiment and positioning, thinking of in poker terms, looking for the sucker, where's the mispositioning, and try to expose those vulnerabilities. I never really thought about it like that, right?
It's a zero-sum game. It's just what it is. Like, you're going to win money in the market, you're going to lose money in the market, and it's very cold and it's very reality. Which is actually a beautiful thing about it. It's reality. It's P&L. You're either making money, only price pays. Brian Shannon says it's exactly what you're saying. And as a matter of fact, I got something related to that I want to talk about. So it's a great lead in, because over the weekend, I saw people blew up on Friday. What the fuck? What are you doing out there? If you're blowing up, the market's down 3%, 2%, Qs are down 3.5%, whatever, and you're blowing up because of that, how leveraged are you? How removed?
50-1. That's how leveraged.
How removed from reality are you if you're blowing up in 1 day of trading that, by the way, happens all the time? Yep. It's a fat tail. We had a 23% correction in the Qs earlier this year. We had down 10, 12% in 1 week based on, one comment that our president says. And you are out there taking all of this risk, completely YOLOing, because the last 2-3 months has been benign. You got that over leveraged in that short of time. It's unbelievable to think about. And so I just want to, so, you know, there's one thing that you can do. Okay. I got a couple things to say, but there's really one thing that you could do. You need to process what you're going through. You need to write it down. You need to keep a journal. If you blew up, even if you just had a scare, even if you just had trouble sleeping Friday night, even if you were like so happy to see that Trump said something different on Sunday, that, you know what I mean? Like if you're that emotionally involved. So, Spencer, you just had a kid, right?
I did.
So, and JC, you have young children, and you know, I got two big words for you guys. I want to use two big words today. I hate using big words, but really, I kind of love using big words. It's a yin yang of big words for me. And so I want to use two big words. So, you know, when you have a baby, the baby will shift emotions very rapidly. Like it could be laughing one moment.
No kidding. I've learned this.
Right? What's that?
No kidding.
No kidding.
Yeah.
And then crying the next minute. And that is called, the fancy word for that is lability. Lability, right? It's just a fancy word for emotional volatility is really what it is. Emotional volatility. And so we are living in a world where the typical investor is labile, has lability, is a fucking basket case. And they're just oscillating, but emotionally, like they were an infant, right? This is like a shrink word. And the reason that it's a shrink word is because people who are adults that have the same thing that babies have, that swing, that's when you're fucked up, right? That's when you are like you have a serious psychological problem when you are labile, right? Mood lability, like you're swinging. Right. And if you ever had a girlfriend like that, you ever had a boyfriend like that, you ever had a partner like that, and you're like, fuck, it's like a roller coaster. So that's what we're seeing right now. So that's the one big word. The second big word is equanimity. Okay. And it's kind of the opposite.
You use that word.
It's a big word. It's a big word with the Buddhists, right? It's one of their big things. And that is calmness, right? That is chill. Right. And so you want to stay chill while everybody else is labile. You want to stay equanimous while everybody else is labile. Right. While everybody else is a basket case, you want to be chill. So I have a few things to say about how you would do that. Like, how do you do that? How do you stay chill? Everybody else is freaking out. Okay. One thing is you take a look at how much risk you're taking. Right. And you manage that and you process that. It doesn't matter if the market's great or the market's terrible. And that's why processing over the weekend. If you got nicked over the weekend, maybe you didn't blow up, but you were like really uncomfortable. You should be, okay, we got to go. But anyway, that's one thing right there. Number two is get yourself healthy, right? So when you get yourself healthy, you have more emotional control, right? So one is you manage how much risk you're taking. Two is you get yourself healthy, right? Very simple, super simple. So you want to be chill, you want to be equanimous while everybody else out there is labile. It's a perfect example on Friday how that happened. One day of terrible market. I just want to say one other thing really quickly. Yeah. Tell your friends about this program, right? If you watch this program and you love this program, take the link and share it with them, because we just want to grow this. It's like the best thing in the morning on finance, better than CNBC. They're just telling you, market comes to a top, they're telling you to buy, market bottoms, they're telling you to sell, screaming at you. It's better than Fox Business. Dear Lord. I mean, that shit is whack. And any other thing out there. So just share it, because we want to have over 1,000 people watching this live, like fucking every day. Like there's no reason. The quality of this content is unbelievable. I was just watching this morning. Fantastic.
Thank you, Phil. Appreciate that.
Yep.
We'll be right back here tomorrow. Same time, same place as always. Thank you, Phil, for coming on. We always appreciate your pearls of wisdom. Everyone, as I said, Steve Strazza is going live right now. So this what should happen is this stream will end. If you're watching us on YouTube, you'll automatically get redirected to Steve's stream, which is going to start in about 10 minutes from now. If you're watching us on Twitter, it'll be on our Twitter account. It'll be on Steve's Twitter account. And then if you're watching us on stockmarkettv.com, it'll also be on the homepage right there. So let's hop. Let's give Steve a few minutes to get himself together. We'll go live at 9:45. Steve will do his thing, and we'll be right here for it. So thank you for watching. Go make some money. Drop me a like on YouTube. I'd appreciate that. And Phil, always a pleasure.
Adios.
All right. Adios, guys. We'll see you in, I guess, 10 minutes.
I can't take no loss. I don't even know what it costs.